Welcome to this deep dive into Tata Power's Q4 FY26 results. This video is for educational purposes only, and I am not a registered financial analyst. We'll be mastering quarterly analysis by learning how to spot growth, risks, and the brutal truth. Financial literacy provides transparency into a company's money management. It helps with trend spotting by comparing year-on-year results and supports risk assessment. Ultimately, financial literacy allows you to make independent decisions based on your own data analysis. The core components of financial analysis include revenue, which shows demand for products or services. EBITDA measures operational efficiency. Finally, PAT, or profit after tax, is the bottom line that belongs to the shareholders. The Q4 headline numbers show consolidated revenue of 15,962 crore rupees and EBITDA of 4,216 crore rupees, which is up 10%. Annual PAT hit an all-time high of 5,118 crore rupees, with an 8% YoY PAT growth in Q4. Renewables are a key growth lever. Renewable PAT surged 59% year-on-year to nearly 2,000 crore rupees. The portfolio reached 11.6 gigawatts, with 5.1 gigawatts under construction. The company aims for 100% clean energy by 2045, accelerating the transformation from thermal to green. Tata Power shows strong solar dominance. Manufacturing PAT grew by 103%, driven by technology and industry-leading yields. Rooftop solar grew by 150%, with annual PAT at nearly 500 crore rupees. They have crossed 3.7 lakh installations and have been ranked number 1 for 11 years. One major operational roadblock is the Mundra situation. Operations were suspended for overhauling. The good news is a supplementary PPA was signed in March 2026. However, operations only resumed in April 2026, causing a significant revenue loss in the thermal segment during FY26. The brutal truth involves a legal risk of $490 million from an unfavorable arbitration award regarding a Russia mining project breach. If enforced, this could strain liquidity. Management is banking on a successful appeal without having provided for the payment yet. Regarding debt and liquidity, the debt-equity ratio is up to 1.62x due to high renewables capex. Net debt has seen a sharp rise to over 56,000 crore rupees, requiring monitoring. However, interest coverage remains healthy. Credit ratings are stable at AA+. The 2045 vision shows a clear path forward. Key milestones include commissioning 2.5 gigawatts capacity in FY26 and aiming for a 70% clean and green capacity share by 2030. The ultimate target is 100% net zero carbon emissions by 2045. The balanced verdict shows strong positives, including surging renewable and solar manufacturing PAT, along with rising Odisha Discom's efficiency. The key risks are the arbitration award, rising net debt, and dependence on legal appeals and thermal plant volatility. Now it's time for your opinion. Does the renewable potential and aggressive growth outweigh the significant legal and debt risks? Use the data provided in this video to decide for yourself.